question 18 of the tutorial letter, which is found on page 39 of tutorial letter 102. I believe all of you have your tutorial letter 102. Faith? Faith? Since our face is away. Melissa, do you have a 102 tutorial letter with you?
Yes, I have it.
Okay. Okay, Mary
And
and Takalani, page 39.
Okay. Thanks.
I have it, sir.
Takalani?
I'm checking it.
Okay, and then Tandeka plus Buyiswe or Buyisiwe.
I've got it.
Hello, Menier. What is the question?
I want to find out if you have a tutorial letter 102.
Yes,
you
I
have-
do have it. Yes.
If you go to page 39. We are dealing with question 18.
Oh, okay. Thanks.
Yes.
Thanks.
Okay, when you tackle a question like this, which it will be in the form of examination, immediately after you receive your paper, you go to the required part and you check what do these people want from you so that we can able to structure your question when you answer. So in this case, they say we must prepare the following statement of CI Limited Group for the year ended 31 March 2016. So we must also note the year which they want, which will regard our current year as 31 March 2016. And then they want the consolidated statement of profit and loss. They want only retained earnings and the non-controlling interest column in the statement of changes in equity. So they only want those two columns, so you must note that. And then they want the only non-current asset section in the consolidated statement of financial position. So in this case, we will say they want SPL, they want SFP, and then they want the SCE. So since they want all three statements, then it means we are required to draft our analysis of shareholders. But if they will say they want only the SPL and the SCE, then there was no need for us to draft the analysis of shareholders. But because they also want the SFP, is the one which is forcing us to draft the analysis of shareholders. So I'm gonna open the thing, the Excel as usual, then you will notify me if you can see it so that we proceed. I'm still waiting for the team to share.
We see.
Sorry? Someone was talking?
Now saying we see Excel.
Okay, but on my side, it doesn't need me to go to Excel. So I'm still waiting for it to respond. Then after I can proceed. I have to wait for the program to respond. When I type, do you see my typings?
Yes.
Okay, I will proceed in this case. So it doesn't allow me to go back to Teams. We'll see as time goes by. Okay, let's go and tackle our question. We're going to start with the all information. We've got CI Limited. Go back to page 39. We've got CI Limited is a company that provides the packaging solution to customers. The main business was original label printing and shrink and wrapping of products. The acquisition of Hadebe Limited expanded the business as Hadebe Limited specialized in the vacuum packaging and the rubber stamping. The following balances were extracted from the financial records of CI Limited and Hadebe Limited on 31 March 2016. We've got the CI Limited group, we've got Hadebe, then they're given all the information, the land, the plant, the inventory, cash and cash equivalents, the investment in both companies, the share capital of the both companies, the retained earnings, the revaluation surplus, the long-term, the cumulative depreciation, debentures, trade and other payables revenue, which those are for the statement of profit and loss, and then ordinary dividends paid and the preference dividend paid. Then additional information. SIA Limited purchased 100,000 ordinary shares and 50,000 cumulative preference shares in Khatebe Limited on 1 April 2011. Each ordinary share of Khatebe Limited carries one vote, and voting rights alone determine control. On the acquisition date, Khatebe Limited equity consisted of ordinary shares, cumulative preference shares, and the retained earnings. Then, at the date of acquisition, the carrying amount of Khatebe Limited and Khatebe Limited assets and the liabilities were deemed to be equal to the fair value thereof. The share capital of both companies remained unchanged since the incorporation. It is a group policy to show the goodwill at cost less impairment in the consolidated statement of financial statements. Goodwill was not impaired during the current year. Number two, both companies classify the 12% cumulative preference share capital as equity. At the date of acquisition, the cumulative preference dividends of Khatebe Limited were not in arrears. So the date of acquisition, which it was on the 1 April 2011, there were no preference shares in arrears. So we must note that. Then it is the policy of the group to revalue the land every 3 years. Since incorporation, the land of Khatebe Limited have only been revalued once on 31 March 2013. The revaluation was correctly accounted for. We must also note that statement whereby they say the revaluations only take place in 3 years. Since the date of acquisition, Khatebe Limited purchased some of its packaging material from SIA Limited. SIA Limited sell the packaging material to Khatebe Limited at a cost plus 25%. Intra-group sales for the current financial year amounted to 187,500. So we must note that statement whereby they say Khatebe Limited purchased some of its packaging material. So the packaging material, they come from SIA. And in this case, SIA is the parent. So its parent selling to subsidiary with regard to the packaging materials. Number 5, on 1 April 2015, Khatebe Limited had inventory on hand, which was purchased from SIA Limited, amounted to 75,000. So in this case, SIA is selling to the parent. Here's the subsidiary. So all the inventories which parent have, you got them from SIA Limited. On 1 April 20, or on 31 March 2016, adjustment number 6, Khatebe Limited closing inventory includes the purchases from SIA amounting to 50,000. Number 7, on 1 April 2015, the preference dividends for the previous year were in arrears. Also underline that portion where they say the preference dividends for the prior year were in area. And then all area preference dividends were declared and paid on 31 March 2016. Also underline that line where they say all area preference dividends were paid on 31 March. Number 8, on 31 March 2016, there was no area interest on debenture. The accountant of the Khatebe Limited was confused and accounted for the interest on debenture of the current financial year in other expenses. So it means when we are doing our other expenses, we must less that interest on debenture, because initially was supposed to go to the finance cost, but the accountant was confused and he put it on the other expenses. Number 9, Khatebe Limited sold 2 machines to SIA Limited. A rubber stamp machine with a carrying amount of 25,000 was sold on 1 January 2050. Underline the portion where they say the machine was sold on 1 January 2015. Then a shrink wrap machine that had a carrying amount of 56,250 was sold on 31 August 2015. You also have to underline that portion when they say it was sold on 31 August 2015. Then the rubber stamp machine was sold for 33,000, and the shrink wrap machine was sold at a loss of 4,000. SIA Limited depreciate the machinery at 20% per annum using the straight line method. Now, adjustment number 10, the issued share capital of both companies remain unchanged. Since incorporation, you can assume that Khatebe Limited profit after tax for the year amounted to 115. Then from there, we have to deal with our answers. which in this case, we have to start with our analysis of shareholders. And remember, they issued the preference shares. So it means the analyzed shareholders comprises both the ordinary and the preference. So its solution, you'll notify me if you don't see my Excel, right? Because this team is still performing, which I don't know what the reason today is performing. Solution to exercise 18. So we're gonna first, for our answer, we're gonna start with analysis of shareholders. But in your books, when we'll be presenting, you're gonna start with the statement of financial position as your number 1. But because in this case, we were guided how must we answer. They wanted a statement of profit and loss, which is our number A. So we say A is the limited group. And then they want the statement of profit and loss. For the year ended 31/03/2016. So we regard 2016 as our current year. Then we're gonna have the calculations. So our calculation will be, let me do it this here. It will be SPL. Then here it will be the SFP. Or let me do the SCE. And then here it will be SCE. And then the next one will be the SFP, which it will be our number C. And then the last one, it will be the calculations. So calculations. Right. Then on our calculation, we're gonna start with analysis of shareholders. Analysis of shareholder. So it got total. It have add since and then have a NCI. Then we go to our add acquisition part. On the add acquisition, share capital. Share capital, the amount that is given from our thing, that is given from the pre-adjustment trial balance is shown as 250. We all agree, right? Because this class I want us to engage, because on the previous class I was the one talking alone, but since you are getting ready to exam, now you must engage with me, like to show that you now understand the content of this module. So if it's possible, I guess most of you are in the quiet background, you can unmute so that we engage. So our share capital will be presented as which amount from the pre-adjustment trial balance?
$250,000.
250,000. Okay. And then we based on this, the person acquired how many shares? 250,000 shares. and then they acquired how much? They invested an amount of, if you check on the investment, they said they bought 100,000 ordinary shares. So the 100,000, when you divide it by the total number issued, the 100,000 shares issued, we are talking with the number. When you divide it by the number of shares issued by Khatebe issued only 125. So if you say 100 divided by 125, it will give you an percentage of 80. So it means this part is 80%, and then the non-NCI will be represented by the 20%. So the 250,000 times the 80% on the add part, it will sit on 200,000, right? And then on the NCI, then the remaining balance will be 50,000. Then we go, oh, sorry, let me cut this and paste it on the right side. They must sit here. And then on the retained earnings, the date we acquired his interest, how much was the retained earnings? You check the information from the pre-adjustment trial balance. 37,500. We all agree, which is it's correct, 37.5. Then on the 80% part, it will be the 37,500 multiplied by 80%, which is giving me the 30. And then the difference will be 7.5. Then there is no any other. The revaluation was not done on 1 April. Instead, the revaluation, they said, when you check adjustment number 3, it is the policy of the group to revalue the land every 3 years. Since the incorporation, the land of Khatebe, we don't know when was Khatebe incorporated, but since incorporation, his land was only revalued on 31 March 2030. And since we are doing the books of 31 March ending 2016, by right, there was supposed to be a revaluation, but here we are only focused on the acquisition. So that revaluation, we think it might happen on the since acquisition to the beginning of the current year. So we can close this part. Then we close it. So this side, it will be represented by 200. It will be represented by 230. And then this side, it will be represented by the 57,500. So the amount we paid for investment, how much is it? Our cash consideration. The cash consideration paid by
It's 237,500.
237,500. Then 237,500. Then we less our 230. It gave us the goodwill of 7.5. Then we all agree. Then this will be the goodwill. Sharp. Then we proceed further. Now we're gonna go to the since acquisition. Since acquisition. On the since acquisition, now we're gonna have to do the retained earnings. So the since acquisition, since this incorporation was made on, they acquired each other on 1 April 2011, and we are doing 2016. So we have a period of more than 3 years. So we're gonna have since acquisition until the beginning of the current year. Till beginning of current year. Then we have to do our retained earnings. But in this case, to be on the safe side, it's useful to calculate your retained earnings. So the retained earnings, we're gonna have the one which it will be the balance or the given figure. Sometimes I use it as a given figure. So the one which is given how much you can use the given, you can use the retained earnings at the beginning of the year, depending. Slash retained earning beginning of the year. So our retained earnings at the beginning of the year is how much? Now we have to check on the pre-adjustment trial balance. On the pre-adjustment trial balance, they show us the retained earnings of on 1 April 2015. The retained earnings was 167,890. Are we happy there? Anyone?
Yes.
Yes.
Okay, so it means the retained earnings here, we put 187,
Yes, sir.
167, 890. Then we have the retained earnings at acquisition. And earning at acquisition, the one which must be subtracted. Acquisition. The one which must be subtracted is sitting on, which is this one. It will be 37,500. So the 37,500 must be subtracted. And then now, so because this balance here, it will represent the movement of whatever happened during the year. So let's just box this amount in the meantime, even though we don't know what's going to happen. So we have to read all the information. So now we go to the information regarding the purchases and the selling of whatever, which things which were being sold during the year. If you check adjustment number 9, there is adjustment number 9, which it's gonna affect. There's adjustment number 5 and 6. One of those adjustments is also gonna affect. So depending on who is selling to who. So where parent is selling to subsidiary, it's not gonna affect our analysis of shareholders. So now adjustment number 4 is not gonna affect our analysis. Adjustment number 5, and they were purchasing from SIA, it's gonna affect analysis. So as adjustment number 6, so as adjustment number on adjustment number 9, Khatebe sold 2 machines to SIA, which Khatebe is the subsidiary. So adjustment number 9 is also gonna affect our analysis. So let's check adjustment number 5. On 1 April 2015, which is the beginning of the year, Khatebe Limited had an inventory on hand which was purchased from SIA and amounted to 75,000. So this 75,000, is it gonna form part of any unrealized or realized profit based on the understanding of your module now? Anyone to answer? Mulise, adjustment number 5, will it form part of the realized or unrealized?
Unrealized inventory which was purchased from SIA.
Remember, now it's opening, right? And which is opening, so we assume that at the end of the year it will be sold, right? We assume that the amounting of 75,000 which we have today, it will be sold. So it means the 75,000 will become a realized profit at the end of the year. But since we want to know anything that happened between the beginning of acquisition until the beginning of the current year, this it won't form part because it happened only in the current Adjustment number 5, adjustment number 5, adjustment number 6, they all happen in the current year. So they're not gonna affect this portion of since acquisition to the beginning. So they're gonna only form part of the current year, the bottom part. We all happy.
Mr. Mlipe, you're referring to number 5 and 6, the inventories.
Yes.
So both the amounts of 50,000 and the 75 we're going to consider in the current year.
Yes, because we are, remember, according to this, suppose we date this. This will be from it will be from the acquisition date, which it was on 1/04/2011 up to 31.03/2015.
Yes.
31.03/2015. So since you can see the other, those things, they fall outside, they don't fall within this date.
Okay.
So it's important to do this so that we can know which transaction falls where. So those transactions, they're gonna fall here. Anything that happened between 1.04 2015 up to 31.03/2016 is the one which is gonna fall here. It makes sense, which it will be
Yes.
on the current year. Okay, so adjustment number 5 and 6, they're gonna fall in the current year. Just mark them on your side. So adjustment number 7, they say on 1 April 2015, the preference dividend of the previous year were in arrears. All area preference dividends were declared and paid on 31 March. So since they were in arrears, they're still gonna be short because there were not enough profit to declare them. Because the profit that they realized in that prior year, we don't even sure about it because we only have the retained earnings of 167,890, but the 167,890, we don't know how much profit they've realized before, but that one we can jump. So the adjustment that will affect, it will be adjustment, the one on the rubber stamp, which is adjustment number 9. So they say Khatebe Limited, which is our subsidiary, our parent, he sold 2 machines to SIA. So in this case, it's subsidiary selling to the parent. Khatebe is our subsidiary, yes, is the parent. So Khatebe Limited, which is subsidiary, is sold the machines to SIA Limited. So it means our analysis of shareholders of Khatebe, it's gonna be affected. So a rubber stamp machine with a carrying amount of 25,000 was sold on 1 January 2015. So the 1 January, it falls here. 1 January 2050, it falls on this part. Fine. And was sold on 1 January 2015. They don't say amount yet because that one was the carrying amount. And then a shrink wrap machine had the carrying amount of this and was sold on 31 August. That's gonna fall on the current year because you see the 31 August does not fall under this period. We happy, right? So now let's calculate the profit of the rubber stamp. I'm gonna do the profit of the rubber stamp here. Profit calculation on rubber stamp. So the carrying amount of the asset is given as 25,000, and then the selling price or the amount which was sold by it is given as for rubber stamp, they sold it for 33,000. 33. So our 33 33,000 minus 25,000, how much do we get?
33,000 minus
8,000.
8,000. Okay. So the 8,000, it will be the the profit because it was carrying this, but we sold for this. So we made a profit. The profit is 8,000. Then the profit was realized is in the books of who? Of our subsidiary. So now our subsidiary he have to say he made a profit. But this profit was made at the end because they sold the machine on 1 January 2015 for the books ending 31 March 2015. So because when we sell the machine, we said the machine, when we sell the machine, we said the profit can only be realized through what? Through when the asset is sold to another third party or only when the asset is being used. So since the asset was sold from party A to party B, so it's only when party B uses that machine, then we're going to realize a profit. So in this case, this will be unrealized profit. Unrealized profit on rubber stamp, which is 8,000. We all happy, or is it be called unrealized profit? If you don't understand, notify me so that I correct it, so that you'll be in the good chance of writing the correct amounts on the 26th of October. So we happy that it's unrealized profit, right?
Yes.
Okay. And then now I want to check, since it's unrealized profit, which sign must it take? Must it take a positive sign or a negative sign?
A negative.
A negative sign. Okay. Then we're gonna put the brackets. Then we proceed. And now this asset was sold on 1 January 2015. So the period of 1 January 2015 up to 31/03/2015 is how many months?
21 to
1 January to 31 March. So it's January, it's February, it's March. 3 months. 3 months. So we assume that if I sell the asset, me and Takalani, we are forming the group. I sell the asset to Takalani today, which today is 1 January 2015. I sell the asset to Takalani, then we assume that Takalani is going to use that asset from today, right?
Yes.
Okay. If Takalani is going to use the assets from today until the year end of Takalani, which the year end of Takalani is 31 March 2000, is 31 March 2015. So that period where Takalani is using the asset, Takalani need to account for depreciation, right? Remember, in this case, Takalani will be the hardware side. So Takalani need to account the depreciation. So when she account the depreciation, she need to write it in her books. So while she writing it in her books, now she will be realizing that profit, the profit which I have. Remember, me and Takalani from the group. So the profit that I had from Takalani, it will be now be realized in the books of Takalani through the depreciation. Are we happy there?
okay.
Now we're gonna record the depreciation. So we're gonna say that depreciation, it will be the realization of the profit. So we say depreciation on the rubber stamp. On rubber stamp, it will be the 8,000, which I made a profit. It will be the 8,000 multiplied by the 20%, because they said the depreciation is written off at 20% per annum using the straight line on the same adjustment number 9. Multiplied by 20%. In this case, how long did Takalani use the asset for the current financial year? Or for the financial year ending 2015? Was on the current is there? It was the last year part.
3 months.
Okay, times 3 divided by 12. So the depreciation, which or the realization of that particular profit, it will now be 400. So that 400, we're gonna put it here. And then, since this was on minus, this one should be on positive, because the main purpose is to deduct what was recorded previously. So if this was on a plus, then this should be on minus. You get it? Anyone who have a question or a clarity? I can't hear you properly.
Ask a question, sir. Sorry.
Yes. I'm listening.
Okay. In terms of that 8,000 in brackets, did we not make a profit?
We made a profit. However, since it's an unrealized profit, it's not yet shown as if I made the profit. Remember, I made a profit, but I sold it to the person who's in my group. Remember, let's say I'm in my side, I'm Khadebe. I sold the asset to Tandeka. Me and Tandeka, we are in the group, right? So since me and her we are in the group, I cannot account this as if I have made a profit. I will only say I made a profit after Tandeka used the asset or after Tandeka sold the asset to another person. If immediately Tandeka sold this asset to Glen Rose, then I, as Khadebe, I made the profit, full profit. Then it's gonna show a plus sign. But because the asset is not yet sold to the third party or the asset is not yet used by the parent, which is in this case is Tandeka, then I, as the subsidiary, I will not recognize a profit with a plus. It will only be a profit with a minus because it's an unrealized. The minute it becomes realized, it becomes a positive. I don't know if you get this part of the realization versus unrealization. If you don't, then I will refer you to learning number 7.
Okay, I understand it, sir. Thank you.
Okay. Then we are done with the rubber stamp. So the shrinking machine was sold in the current year, the 31 August 2015. That's from in the current year. It's not going to be recorded yet. Then we go to the last portion, which it will be the preference dividend. The preference dividend is based on the adjustment number 7. Adjustment number 7, it says, on 1 April 2015, which is the beginning of the current year, on 1 April 2015, the preference dividends for the prior year, 1 year, they were in arrears. All area preference dividends were declared and paid on 31 March 2016. So on this date, when we are closing the books on the since acquisition to the beginning of the current year, we had the area preference dividends, which they were not yet paid. So we say area preference dividends So our preference dividend will be calculated by how much preference were issued. We go back to the pre-adjustment. On the pre-adjustment, it tells us that they've got 12% cumulative preference shares, which they were issued by 125,000 that were issued by Khadebe. So we say 125 multiplied by the 12%. Remember, we are using the value, not the number. So in case of the number, they were issued only 700. They were only issued. Okay, they were also issued 125 in rents. So you must also note that sometimes they can say they issued 87,500 shares for the value of 125. So you have to take only the value multiplied by the percentage, not the number. The number only for ordinary dividends. The preference, we use the value. So in this case, we're going to say 125 times 12%, it gives us the amount of how much? 15,000. So this 15,000, we're going to record it as a minus. However, it's not yet paid. The reason it's not yet paid, assumption is that there was no enough profit. Because the statement tells us that they were in arrears. It's unlike the one which were dealt in the example 9, whereby we can see that indeed this we didn't have a profit, because they were just said all the preference dividend were in arrears. But in this case, when you check, for us having the retained earnings at the beginning of the year being 167,890, we don't know whether it was 167,890 based on whatever happened as a result of the prior accumulated profits, or is 167,890 based on the current year profit which they generalized. But since they said they have the area preference dividends, we can assume that they didn't have enough profit. So this 167, it came as a result of the prior year's accumulated profits. So remember, we only want to declare the preference dividend from the profit itself, not from the total accumulated profit we have. We want to declare from the current year profit itself. Any question with regard to this area preference dividends? Question? Okay, assumption because there is no question. We proceed. Then we have now we can close our retained earnings to see how much was the retained earnings. So we're gonna add whatever is positive, you add, whatever is negative, you minus it. So let's calculate. 167,890, which is a positive, you less 37,500, because that's what the retained earnings at acquisition part. You minus 8,000 for the unrealized profit. You add the 400 of the realization of the profit as a result of the depreciation, and then you minus the 15,000 came as a result of the shares not paid, the preference dividends. So I get the amount of 107,790. So you put your 107,790. We are happy, right? So we take the 107,790 multiplied by the 80%, which it will be on the since, multiplied by 0.8, give us the 86,232, 86,232, and then the remaining figure will be the 21,558. Then we go to the current year, which now fits here. So on the current year, when you read adjustment number last 11, they say you may assume that the profit for Hadebe is estimated as 110. So now you can say profit for the year sitting at 115,110. Now you have to account whatever transaction happened during the year. As I repeat, the transaction that I mentioned that they happened during the year was, okay, before we close off, there was a transaction. It's not even a transaction, it's just an information. Under the retained earnings, there is a revaluation surplus. You see the revaluation surplus of 1 April. I need the confirmation here because that question, it changes the information which was presented on adjustment number 3.
Yes, there is revaluation surplus of 25,000.
And when was it dated?
1st April 2015.
And then read adjustment number 3.
Adjustment number 3 says, it is the policy of the group to reevaluate land every 3 years. Since incorporation, land of Khatebe Ltd have only been revalued once on 31st March 2013.
Okay.
This valuation was correctly accounted for.
So now let's do the issue of the revaluation here. The revaluation of Khatebe. So the revaluation was done on, the first revaluation was done on 31 March. First rev was done on 31.03/2013. So based on adjustment number 3, when will be the next revaluation? I will request Mudise to
That will be
Mudise.
Okay.
in 3 years, in 2016, 21 March 2016.
So the next revaluation will be on 31 March 2016. Okay. But adjustment, the information on the pre-adjustment trial balance, what does it say? What does it say? When does it say the revaluation was done?
It says 1st April 2015.
So since it says the revaluation was done on 1 April 2015, we have to account it on that date, 1 April, and they said it was correctly accounted. You see that statement where they say this revaluation was correctly accounted for. So since they said it was correctly accounted for, we have to record the revaluation on the date it pertains. So on this, instead of revaluing it on 31 March 2016, we're gonna do the revaluation on 1 April 2015. So the revaluation on 1 April 2015 is shown as 20,000. And 1 April 2015, it falls under this date. April 2015. Initially was supposed to go to the current year, but because they want any information up to the beginning of the current year, because the information they say since acquisition till the beginning, they don't want to say since end. So since they say end, whatever happened on the first of the current year must also be accounted here. Do you see where's the trick? According to us, this revaluation was gonna be recorded here as revaluation surplus on the current year as 20,000, because it happened on 1 April 2015, the current financial year. We happy there?
Yes, Mener, I do understand it. I don't know about my fellow colleagues.
So
I want to ask something. Since it says 1st April, and this year we're working on is going to close, obviously, on 31st March 2016. So we take the figure as it is.
Yeah, we're gonna take it, the figure as it is, as 20,000. We don't say the 20,000 less something.
Oh,
Because
okay.
that's what the revaluation surplus given on 1 April 2050 as 20,000.
Oh, okay. Thank you.
Yeah. All right. So instead of recording this revaluation surplus here, it's gonna go on top here without even affecting the retained earnings, because after all, the revaluation surplus doesn't affect the retained earnings. It goes at separate on each column, even on the statement of change in equity. So remember, this column is only things affected the retained earnings. So the revaluation surplus will sit on its own as just revaluation surplus. But initially, if we were not having this beginning weight here, we were gonna record the revaluation here because it happened on the beginning of the year, the current. So it means on this case, anything that happened from the 2nd, we can say everything that happened from the 2nd of April until the end, it will be recorded here. But anything that happened between 104-2011 up to 104-2015, because it will be the beginning of the current year. It's gonna fall under this side. So here the datings will change to 04, and then here it will be the first. So revaluation surplus is 20,000. Doesn't have any impact by the what minus what, because they already calculated it for us. It's 20,000. So in the at acquisition, it will be we say 20,000 multiplied by the 80%. $16. The remaining will be 4. Then we proceed. Profit for the year we are given as 115. So now we have to account things happen during the year. Adjustment number 5 and adjustment number 6. Adjustment number 5, on 1 April 2015, Khatebe Limited had inventory on hand which was purchased from SIA amounted to 75,000. So in this case, SIA was selling paints to Khatebe. And then on 31 March again, Khatebe Limited closed inventory include purchases from SIA. So SIA was also selling to Khatebe. So the one whereby parent is selling to subsidiary, they will only affect the current year in the books of, who can guess? Things that they were sold by SIA selling them to Khatebe, they will affect the current year of which statements, the analysis of Khatebe, or only the consolidated of the group. We see where, give a try.
I will try. Okay, first and foremost, is it let me see, 75 and 50. Okay, I will take a guess, Minier.
It's fine. Guess. Maybe that guess it will lead you to the correct information.
It will affect the consolidated statement of the SFP.
Okay, it's fine. And then what about this analysis of shareholders? Will the analysis of shareholders be affected by this information? Especially whereby is SIA selling to Khatebe? Remember, SIA is the parent, Khatebe is subsidiary. So parent selling to subsidiary. Will the analysis of subsidiary be affected?
If no.
No. Okay. So the analysis is only be affected if is the subsidiary selling to the parent. As long as subsidiary selling to the parent, the analysis will be affected. But in this case, parent is selling to subsidiary. Only the statement of the group will be affected. Please note that on your side. I also mentioned in the prior learning units, when we were dealing with learning number 7, there was a situation whereby I did the summary of this transaction. You can refer back there and then you will see how do we account for this transaction. So the adjustment number 5 and 6, we still want to jump them for now. They will only affect the group side in the current year, because now we are dealing with the current year. They will only affect the group side, not the subsidiary side alone. So we go further. Adjustment number 8 is the area on debenture. They say there was no area on debenture. They accounted. Okay, that one is the one we have to correct. Then we still go back to adjustment number 9. So adjustment number 9, we go back to it. So again, now there was the unrealized profit recorded in the last year of 8,000 on the rubber stamp. So that 8,000 is no longer going to be recorded again. It's gone. It's recorded in the last year. Now we focus on the current year. On the current year, the only thing that we have to record, it will be the depreciation on the rubber stamp. So the depreciation on the rubber stamp so the rubber stamp was sold last year. And then Tandeka, I will still use the Tandeka in this case. Tandeka used the asset for 3 months. And then we accounted for depreciation in the books of Tandeka last year. Done. Now, in the current year, Tandeka have to account for the full 12-month depreciation. So she will record it based on the profit realized by me as Khatebe. The profit which realized by me is 8,000. So you say 8,000, which is still unrealized because I had Tandeka didn't use the whole asset yet. So it will still say on 8,000 multiplied by 20%, then multiplied by the whole year, which will be 12 over 12. So 8,000 times 20%, it gives us an amount of how much? The 1,600. So we record the 1,600 here. And again, the 1,600 will be recorded as a positive figure. The reason being, we are trying to realize the profit we made as a result of selling the asset to our parent, which our parent in this case is Sia. But for the purpose of this class to understand, we use the Tandeka as our parent. So are we all happy here?
Yes.
Okay. Then the rubber stamp, we are done with it. Now we're going to go to the same transaction number 9. There is now said a shrink wrap machine that had a carrying amount of 56,250 was sold on 31 August 2015. Then that shrink wrap machine was sold at a loss of 4,000. Now we're going to say unrealized loss on sale of shrink machine. How much was the unrealized loss? Lise?
So we calculate it on the 20%.
Okay, wait. What are you calculating on the 20%?
The loss. Okay, so
you don't even need to calculate. Read the statement correctly.
okay, so the rubber stamp was sold at a loss of 4,000.
So you are already given the loss.
Yes.
So there are two ways. Sometimes they might not give you the loss. They say the machine had a carrying amount of, like if you see that the one of a rubber stamp, they didn't give you the profit straight. You have to calculate it by using this thing, by using this part. So you calculate the profit here. But suppose we use the same information, suppose they give you that type of information for this one, whereby there's a loss. They will say a shrink wrap machine that had a carrying amount of 56,250 was sold on 31 August 2015. Then the machine was sold for an amount of, you see where they try to trick you. The machine was sold for an amount of, now they give you the value.
Okay.
That's why that's why they say the rubber stamp machine was sold for. They give you the figure as 33,000. So if they want you to calculate the loss, they will say the machine was sold for. They don't say at a loss of or at a profit of. If they say the machine was sold at a profit of 9,000, that 9,000 automatically is a profit. If they say the machine was sold for 56,000, now you might have to say the 56,000 less the carrying amount, then it is either going to give you the profit or it can give you a loss. If the selling price is higher than the carrying amount, it's going to be a profit. If the selling amount is less than the carrying amount, it's going to give you a loss. Are we all happy there? It's not directly to Mudisi. Even you others, are you happy there? So you must note the information for as an amount or a profit of or a loss of. So read the statement. So in this case, the loss was already given. So the loss is already 4,000. So now we calculate unrealized loss on sale of machine, which it will be 4,000 straight without even calculating it because it's given. Are we happy at Glen Rose?
Yes, Meneer.
Today is a different class. I will just be selecting names randomly. So you must make sure that you are listening. And where I choose your name and then you don't understand, just mention I didn't understand. What are you saying? So it's 4,000 as is unrealized loss. So since it's an unrealized loss, in my recordings as my subsidiary, do I record it as a positive figure or do I record it as a negative figure? Anyone to try? You can also refer back to the prior one, how we did it, which it was unrealized profit, this one, but now this is unrealized loss. Faith.
I can just give it a try.
Mhm.
It will be a positive sign so that we can account it for. Yeah.
Faith said it will be a positive sign. The reason being is a positive sign is because the loss is not yet realized. But the minute the loss is being realized, it will be straight as minus because we made a loss.
Yes.
The same applies to the profit. If the profit is realized, it will be a positive figure. If the profit is unrealized, it will be a minus figure. So faith is correct. Unrealized loss on the sale of a shrinking machine, it will be a positive of 4,000 because it's not yet realized that loss. Now, let's realize the loss. We assume that we sold the shrinking machine. Is it a shrinking machine? Yes, we sold the shrinking machine to our parent. So parent have that shrinking machine. We assume that she will start using the machine now. So we sold the machine on 31 August 2015 for the financial year ending on 31 March 2016, right?
Yes. Yes.
So now we have to calculate the realization. So the realization will be in the form of either the parent sell the whole asset to the third party or the parent use the asset. So in this case, they didn't mention that it is the mandate of the parent to sell the machines to other parties. So we assume that she's gonna use it. But if the statement was said, it is the mandatory of the parent to sell the asset to the third parties. Now they have to give us information that he sold the asset to the third party on which date. So the minute he sells the asset to the third party, and we check that it still fall within our financial year, then we can account the whole loss as now to be a realized profit on the shrinking machine. So our realized profit, it will be in the form of depreciation for this situation because the parent doesn't sell the machine to other third parties. Instead, the parent uses the machine. So now it will be the depreciation on the depreciation on the shrink wrap, because now we are dealing with the shrink wrap. It's no longer the rubber stamp. The depreciation on shrink wrap. So when was the shrink wrap machine sold? The date?
31 August 2015.
So the end year is 31 March 2016. So now we calculate the months. We're gonna have September, October, November, December, January, February, and March. So we assume that our parent will use the machine for 7 months, starting now. So it will be the loss that we generated is 4,000. We multiply by 7 divided by 12 is fine. Divide by 12. And then multiply by the 20% because they said they mentioned the return off at a 20% straight line. 20%. So calculate it for me and tell me the figure that you get. $4,000 multiplied by
167.
Wow. So 467, round off to the nearest. 467. So my 467, it will now take a minus sign because now I'm trying to realize that loss. Anyone who have a question there? Silence, I will assume that everything's understandable. Any question? Any question? None.
Okay, just to confirm, depreciation or the profit, we record it as a positive.
Depreciation on the profit, we record it as a positive. Yes, on the profit, you see, this was on the profit. This was unrealized profit. Then we record it as a positive.
Okay.
Then on a loss, we record it as a negative.
Negative. Okay.
So it's the most important to note whether you are making a profit or whether you are making a loss. If you are making a profit, its depreciation, it will be on a minus. If you are making a loss, its depreciation is now be, if you are making a profit, its depreciation will be recorded as a positive figure. Remember, you have to check, was the profit realized or unrealized? If it's now realized, suppose it was realized, then the depreciation was going to also be recorded as a positive figure, as a minus figure. So it's important to check whether did you realize or is unrealized. So the minute you sell the asset to the parent, you are creating the unrealized profit. It will only be realized after the parent have used the whole asset, which it will be after the whole profit was now realized, because it will be realized bit by bit. So it means he realized the profit by then 3 months, and then now realized the profit by the full 12 months. In this case, was realized in full by the 12 months. So it will be another further 12 months, another further 12 months. Then the remaining balance, it will be on the 7 months. Then it means in that case, the profit will now be realized through use. So another question. There was a summary which was done for this on learning unit number 7. If you can recall back to the learning unit number 7, is where you'll see there was a summary done. For just pause for a moment, let me try to see if I can do that part of learning unit number 7 where you can see the summary. Just hold on. July, I'm in August. August 7, 8. Okay, let me see the one on the 14th. The classes on the 14th August. Yes. The class that we did on the 14th August is where I had the summary of these things. if you can recall back to the class on the 14th August, I did a summary of where the parent selling to subsidiary selling to the parent, where to deduct what and what affect what. So in this case, we have the subsidiary selling a depreciable item. Subsidiary selling depreciable item, just hold on. Subsidiary selling non-depreciable, subsidiary selling, parent selling to subsidiary, then okay, it will be on the next class, which it will be on the class of 14 August. It will be on the class on the 21. So the classes both for the 14 and the 21 is where we had the summary. So on the class for the 21, the subsidiary was selling an depreciable item to the parent. So which it affected the annual profit will affect the current year on the SFP, and then will affect the real depreciation, will affect the SFP on the accumulated if you deduct the depreciation, the SPL. The last depreciation on the profit will be deducted from the admin expenses on the face value of SPL only if the admin expenses are applicable, and on the consolidated statement, the real depreciation is added to the profit on the face value of SPL. The unrealized profit will be deducted in the SPL when we deal with the individual statement, and then the effects of the analysis of shareholders on the subsidiary part, based on the date which it can be since acquisition to the beginning of the current year or current year. The profit will be deducted on the current year it occurred and add depreciation on profit realized based on the year which it occurred, which is to be the last year realization. So Modise, if you want this information, I will send it to you via email, which is based on the presentation which was made on the classes for the 14th and the 21 August. So let's continue with the current info. Anyone who have a question up to so far before we go to the issue of the preference dividends? Any question? None. Then we proceed. The preference dividends. Preference dividends. The preference dividends, it will be, now they said on adjustment number 7. On 1 April 2015, the preference dividends for the prior year were in arrears. All preference dividends were declared and paid on 31 March 2016. So now we assume that we have a profit. So on 1 March 2016, we're going to record the preference dividends as we said they are declared on the value of 125,000. So we say 125,000 multiplied by the 12%. Now is the current year. And we declare them on the profit we have. So the profit that we have is 115. So on the current year, we're going to declare the preference dividends of 15,000, which it will be the minus. But when we record the analysis of shareholders, we're going to say this 15,000 multiplied by 2. 2 being the one for the current year and the one for last year. Please note that when we'll be doing with the analysis shareholders of the preference dividends. So here it will be the 15,000. And then since they are declaring the preference dividends, they also have to declare the ordinary dividends. So the ordinary dividends that paid, if you can check the information of Khatebe, the last two information, the last two lines of the pre-adjustment trial balance, you see they say preference dividend paid is 30,000, not 15. Do you see that info? Page 39.
Yes.
And then the reason is 30,000 is because it's the 115,000 for the current year plus that 15,000, this one, the one which was now in area, it means now they have enough profit. So now they are paying them daily too. That's why now it's 15,000 plus this 15,000, the one of the current year, they're going to equate to 30. So this 30,000, it will be shown in the analysis shareholders of Hadebe Limited on the preference shares analysis, because this one was for ordinary analysis. This one, it was only for ordinary shares. So I guess everyone is happy there. So let's proceed. Then we're gonna close our books now. So we have the ordinary dividends. The ordinary dividends, they're gonna go straight as ordinary dividends. The ordinary dividend will be recorded as amount paid, which is 12,500. So we record the 12,500 as minus. So we say minus 12,500. Let me put the brackets, because if I use the minus, it's gonna want me to use the another cell. So the 15,000, when we do the apportionment, so this 15,000 is gonna affect the profit because it led from the profit. It's gonna affect this. So this, all of it, we're gonna put it in the box. Then this one is separate. Are we happy there up to so far? So we say 115, we add with 1,600, we add with 4,000, we less 467, we less 15,000. One must do a calculation for me. And give me the figure.
Can I just confirm something while another one is doing the figures?
No problem.
Yes, okay. The 15,000 of since until current and the current one, we're gonna have them regardless of if SIA purchased the ordinary shares, the preference shares as well. We will have that.
I don't follow you. You said the 15,000?
The 15,000, the two 15,000.
This one, the one I'm pointing in blue, and this one.
Yes, yes. If maybe on this additional information, maybe SIA only purchased the ordinary share and not the preference shares.
Oh,
I have those two.
No, we're gonna only have the one for ordinary alone because SIA didn't purchase any preference. So the minute SIA purchased preference, it means I have issued preference shares. So when I issued preference shares, I have to account this to show that SIA purchased preference shares in me. As a result, I want to show the amount I paid to him in the form of preference shares. That was a good question. Thank you for that. So only if he purchased ordinary shares, we don't have these things. We're not gonna show this. So we only show this if now he have the preference shares. As per the amount shows in the investment, you see on the investment, he purchased 100,000 ordinary shares and also purchased 50,000 cumulative preference shares of 57,500 in the books of Hadeb. Okay, amount, the figure for the profit. The figure for the profit, please. Because she mentioned that while if someone is confirming the figure, I want to ask a question.
It's 105,243.
Okay, so 105,243. Which is true. I calculate this on my side. Now, the 105,243 by 80%, it will give us the 84,194, and then it will give us the 21,049. I want to check something with Greg. Greg. I don't know if he's listening or not. Greg. Okay, seems like he's not listening. Let's continue. Then we're gonna do the analysis of shareholders of the preference shares. So all here information is fine. We're gonna just have to record the one for ordinary dividends. So the ordinary dividends is 12,500. So that 80% will be 10,000. And then here it will be the 5,000. So anyone who have a question with regard to this analysis of shareholders up to so far, the one for ordinary. Anyone have a question? Okay, I assume that none. So now we do the one for the preference shares. For the preference shares, then we have the total, the add part. Sorry, it will be the add side here, the sins, and then the NCI. So here I'm gonna run faster because I think our class is gonna knock off a little bit late today. It's not gonna be the same as the prior ones. On the preference shares, at acquisition, we've got share capital. So the share capital of SIA for the preference shares is how much? Preference shares capital of SIA. I mean of Khatebe. On cumulative preference. Value, please.
57,500.
No.
125,000.
Yes. The capital is 125,000. The 57,000 something is the investment value that he did. So here's 125,000. So on the acquisition, now we check. He acquired how many preference shares? He acquired 50,000 preference shares while Khatebe issued 125. So we're gonna say 50,000 divided by 125. The 125 in respect of the preference shares, not the ordinary. Please check those things. We've got ordinary shares, 187,500 for SIA and 125,000 for Khatebe. And on the preference, we've got 12% cumulative preference shares of 125,000 for Khatebe. So in this case, it will be 50,000 divided by 125, the one for preference. Then it gives me the 50 divided by 125. It tells me he only acquired 40%. So in this case, it's 40%. And then NCI will be the 60%. So 125 times the 40% on the at acquisition, it gives me the 50,000. And then on the NCI, it gives me the 75. And then on the, is there anything to go there with regard to none? So we go to the totals. The total will be sitting as, and here we have the 50. And then we have, we do this. Top border. Then here's 75. Then we have the consideration paid. Consideration paid. He paid an amount of 57,500. 500. So it means we have a goodwill of 7.5. Goodwill. Then we go to the since acquisition to the beginning of the current year. Since acquisition to beginning of current year, and we have an amount of, don't know yet. So now is it was those area preference dividends. You remember the preference dividends which they were not paid. This one. This. So this need to be recorded in the current year. If you refer back to your example 9, unit number 9, the likes of example let me check example 2. So here, if you check that, it will be the same as the one on example 2, where the preference dividends were in area. If you can check the example of page 221. So the one which they were in area, now they have to be accounted for in the since acquisition, but we're gonna record them as the preference dividends. So we just say the preference dividends here is the one which they were in area, preference dividends, which they were in area in the last year. This one, you take the full amount of the 15,000, you put it here. 3, it will be on the total. Then here it's gonna be using the 40%. When you use the 40%, it will be 6,000 on the since, and then it will be the total of 9,000 on the NCI. Then on the current year, we say profit attributable is based on the preference dividend paid in the current year. Preference, so we say profit attributable to preference owner, which it will be the 15,000. This is the 15,000 paid here, because here the 15,000 was now paid. This one, it's now paid here. So we take this figure, this one, we put it here. I'll use the same color. And then now we say preference dividend paid. Preference dividend paid. As a result of the adjustment number, two, whereby they say the board classified the 12% cumulative at the date of action, the cumulative preference dividend of Khatib were not in areas. And then they paid some dividends on adjustment number 7. On 1 April, preference dividends of the prior year were in areas, and then all area preference dividends were declared and paid on 31 March. So now is the payment part. So when we pay, because we also pay with the one in the prior year, we're gonna say the 15,000 of the last year plus the 15,000 of the current year, which now they're gonna give us 30,000. So this 30,000, it will be in the minus because we are paying minus on the bracket. So please note this 15,000, it will be this one, the blue one here plus this. So we add them all together. Okay, let me do this. I would say 15,000. And then another one to be the 15,000 here, which it will be the blue one. Here is just for illustration purposes. You don't need to show this. You just say preference dividend paid 30,000. But me, I'm doing this illustration to know that it was this 15,000, this one plus this one. Then you put them as 30,000. Then from there you apportion it according to the interest of the 40% and the 60%. So the 15,000 is 40%, it will be 6,000, and then the 9,000 here, and then here it will be the 12,000, and then the 18,000, which it will be the 18,000 on minus brackets 12,000 brackets sorry. Then up to so far, are we all happy?
Yes.
Especially with this regard to the preference things, preferences. So this, when you add them all together, they're gonna give you nil. It's 2 positive and 1 and negative all together equal. And then here you can only remain with the 75,000 from the top because this one they less each other. Any question up to so far? So now we're gonna go to the consolidations. So the consolidation, they say we must draft the consolidation statement of profit and loss. So on the profit and loss, we're gonna start with the revenue as usual. The revenue, which it will be the if you go to your pre-adjustment trial balance, the sales, it will be the 129,150 plus the 503 1291 250 plus the 503 750 503 Now there was the information on adjustment number 4, where they say SIA Limited at the date of acquisition purchased some of its packaging material from SIA, purchased from SIA, and SIA sells at the SIA sell the packaging material to Khatebe, the cost plus 25%. The intra-group sales amount to 187. That's intra-group sales need to be subtracted. So in this, you less the 187,500 is from the intra-group sales. So you have the value of 1607,500. Anyone who have a question up to this with regard to this transaction, please notify me. Then we go to the cost of sale. Cost of sale. The cost of sale will involve the two amounts from the pre-adjustment trial balance, which it will be the 750 plus 278, 750. Now, remember, when someone is selling, it means someone is purchasing, right? Mary? Mary? We see where
Minier, I'm a bit lost.
I'm saying when someone is selling, someone is also purchasing. If you are selling something to me, it means I am purchasing, right?
Yes.
And since we are in the intra group, so whatever purchases and the sales of the intra group, they need to be eliminated. Okay. And then we were told that SIA adjustment number 4, we were told that Hadebe purchased some of its packaging material from SIA. So it means SIA is selling 187,500 and Hadebe is purchasing 187,500. So as we know, the purchases, they affect the cost of sales, right? So it means our cost of sales also need to be subtracted by the 187,500.
From the parent account,
From the group, not
Okay.
parent, from the group.
So now, if I'm correct, we're going to add the amounts together with the adjustment.
We add which amount with the adjustment?
The 57.
The 57. Which 57?
Okay, I'm reading the wrong amount. The 187,500.
Yeah. The 187,500 will be less both sides. Will be less in the sales part, because on the sales part is who selling, is SIA selling, which is the parent. The parent is selling. Let's do this so that you can, I'm gonna do elimination in the form of journal so that you understand it. It will be like this: elimination, journals. I'm gonna do each one journal. So let's start with the journal of Hadebe. I mean of SIA. SIA. Here on his book, you're gonna have sales, right? Of 187,500. What is he selling? He's selling an inventory. Okay. Of 187,500. Right? It's yearly one. We are going journaling ya Hadebe. Hadebe. On this journal ya Hadebe. Hadebe is purchasing. So which is inventory, right? So the purchases or the inventory will be the 187, right? And then as a result of him having, here it can be the inventory, it can be the cost of sale, depending. We can say inventory, we can say cost of sale, because after the cost of sale, it will be increasing on the other side. And then here is the purchases or the inventory of 187 on the books of Hadebe. Then here is either a purchase via bank or it will be the trade receivable, depending on how he purchasing them. So this need to be eliminated because SIA is selling to Hadebe.
Melia, are you typing something? Because my screen is blank. Maybe I must minimize.
Yes, I'm typing.
Okay, I wasn't seeing. Okay, there.
Can you see it?
Minimize, yes.
Oh.
Sorry.
So we've got sales of 187 on SIA, and on the other side, Hadebe is purchasing this 187. So this need to be eliminated. We are going to eliminate these two things. This is their intra-group. So we eliminate this. So we're going to only, so when we eliminate on the journal alone, it's going to be sales 187. And then the purchases S187, which remember the purchases, they increase what? The cost of sale. That's why now this we record on the cost of sale. You get it.
Yes.
So we are deducting the same amount of 187 because it affects both sides in the books of SIA and in the books of Hadebe. Now all these two, they are group. So you're happy.
I'm happy. And then the 25% we ignore.
I'm happy. We are still going there. We are still going on to the 5%. You're gonna
Okay.
see it.
All right, thanks.
Yes. So we are on 187. So we left it. Now we go further. This where now you are 25% gonna fit. Adjustment number 5. On 1 April 2015, Khatebe Limited had an inventory on hand which was purchased from SIA. Now it's the beginning of the year. I'm having inventory of 75,000. Now I want to ask, is the inventory of 75,000, its profit will be realized or unrealized? Let's check with Tandeka. On the Tandeka side, will the profit that's gonna come from the 75,000 will be a realized profit or unrealized profit?
I think it will be realized profit.
Okay, Tandeka said, let me write on my side. Tandeka said it will be realized. Then let's go to Mudise. Mudise, on your side, it will be realized or unrealized?
Okay, it's profit as it. I think it will be realized.
Mudise also said it's realized. And then I will go for Mary. Mary, realized or unrealized? Mary, I can't hear you. We see in the meantime, realized, unrealized?
Verify. You mean the selling?
The 75,000. Remember, they say on 1 April, Khatebe had inventory on hand, which was purchased from SIA. So now I want to know in the books of Khatebe, remember, Khatebe is a subsidiary. So subsidiary on Khatebe had an inventory on hand. So Khatebe as a subsidiary, he got inventory from the parent, which is SIA. Now I want to know the profit which was realized by SIA. The profit which SIA have, is it realized or unrealized? Taking on the hand that
Adjustment on adjustment number 5 or number 6.
Number 5. I'm focused on adjustment number 5 alone. I'm still gonna go to adjustment number 6.
On number 5, I think is not yet realized.
Okay. It was who? Mary or Buisiwe?
It's Glen Rose.
Glen Rose is Buisiwe, right?
Yes.
Because remember, on my side, I don't see Glen Rose, I see Buisiwe. So Buisiwe said it will be unrealized profit. Now I go back to Mary. Mary, your answer you said is what? Mary. I don't know if the Mary have a problem with Mike or what. Okay, let's go. Now let me go back to my thing, to my Excel. We had an inventory opening. An inventory, which is 75,000. Then I make the purchases of 200,000. Okay, let me do this. It's 200,000. So now my inventory will be 275,000, right? We all happy. Answer. Hello.
Yes, that is correct.
Okay.
Yeah, that is correct.
And then Now we sell or sales. When we sell, I'm gonna manipulate this thing in the meantime. I just want to check something. In this case, they say the selling was 187,500. 187,500. So we say 75 plus 275. I'm sorry, 75 plus 200 minus 187. It gives me the 87,500 as the closing. As the amount I have. So now we have 87,500. So, which it will be the closing inventory. When we manipulate according to the information given, it will be like this. Now I'm trying to manipulate it. We have a closing balance of 50. And then we have the selling of 187,500. And then the opening balance was 75. So it means the purchases will be something. The purchases will be the balancing figure. So we have 187,500. Mm. $75,000 plus $50,000 plus 500, 7 minus 75. Okay, 162. Yeah. So our purchases as a balancing figure, it will be 162,500 is the balancing figure. We are not given, we don't even know it. So if you say 75,000 plus 162,500, we have 237. Then you say 237,500 minus 187, the one which we sold. Okay, let's see. 237,500 minus 187,500. So we remain with a balance of 50,000. Are you following this transaction? This calculation that I did. Are you following it? I can delete this. Do you follow this calculation?
Yes.
Okay. We are doing the books of Hadebe. Hadebe is having an opening balance of 75,000 on the inventory. He purchases an inventory of 162,500. Now the total inventory he has before sales is 237,500. Now he sells 187,500. He left with 50,000. Now, I asked the question whether the profit that's gonna come from the 75,000 will be realized or unrealized. Some they said realized, some they said unrealized. So the profit that's gonna come from the 75,000 in the current year, it will be realized. The reason being is included here. on the amount that we sold is included this side. Are we happy there? It's 75,000. You add it with 162, it will be 237. So the 237, you have to less the 75,000 first, as the first in, first out. You less the 75,000 first. So whatever remaining, it will go under the unrealized. Is it making sense? Or now I'm talking Greek?
It's making sense.
Okay. So the 75,000 will be realized profit. And then the closing of 50,000 will be unrealized because it will be realized in the next year when we'll be selling that inventory. Now we go back. What does the unrealized profit do in our income statement? Does the realized profit, we add it or we subtract it? It was unrealized last year. Now it's becoming realized. So when we're doing the books of last year, 2015, that 75,000 profit was unrealized. So it was added last year. Now in the books should be realized and then we subtract it. The same information will be found again on my books, the classes that we had on the 24th and the 14th of August. The 21 and the 14th of August is the one that we're gonna have the same summary of how do we treat the unrealized profit versus the realized profit in the SPL versus in the SFP versus in the analysis. So the profit of coming from the 75,000, it will be minus because now it's realized in the current year. Because it was unrealized as profit last year. It was recorded fully as a profit on the cost of sale. So now we're gonna say minus. So you're gonna say the 75,000, you multiply by 25, you divide by 125. It gives you the value of how much? I didn't do it on my side. Multiply by 25 divided by 125 is 15,000. So you less the 15,000. And then you're gonna add the one on the closing, the closing inventory, which is now unrealized. You're gonna add it back. And you add, which it will be on the balance of 50,000 plus, you say 50,000 multiplied by 25 divided by 125, it gives you the 10,000. Any question up to so far? Buyisiwe, Rutland Rose.
No question, Menier. Thank you.
Tandega,
No question. Thank you.
Mary. Faith.
No question, sir.
Okay, Mulise.
No questions, thank you.
So that will be the treatment of the cost of sale up to so far. So the question is long, and it's because the reason is long is because I wanted you to understand the part of the analysis of shareholders, because now it will be the cutting of the pasting of the same information that we get from the analysis. Then from there, it means our gross cost of sale it will sit at 861. Then we have the gross profit, which will be this less this. It's straightforward, that one. Uh, 746,500. And then we have the other income. The other income, it will be the amount given as the other income, which is shown as 28,125. You're gonna say the 28,125, 28,125, and then you subtract the amount for preference dividends. Remember, there was a preference dividend that was received. Let's go to, now we have to go to calculation. Preference dividends. You see this preference dividend, 10,000, this, the dividend. This was declared by subsidiary. You remember them? Hello? Tandeka.
Yes, Mr. Bolepo.
So I want to check, do you still remember this preference dividend declared by subsidiary? This one, the one for 10,000. He declared the total amount of 12,500, but parent was entitled, based on the percentage of the parent, he was entitled to the 10,000. You remember them, right?
Yes.
Now they need to be subtracted because parent got them. So when he go to the group, he must deduct them so that it will be eliminated. So we have to eliminate the 10,000 of the dividend from the subsidiary. And then what else? Then we've got the interest income of 10,000. Do you see the interest income of 10,000? From the pre-adjustment trial balance? Seems like now you are tired. Why are you no longer responding? Faith?
Sir,
I wanted to check, do you see the interest income of 10,000? Are you tired, guys?
Not yet, Mynheer.
But you are not responding. I'm asking the question, you are not responding. So I'm not longer sure if you are still understanding or not. Or now I'm just talking, then you are not following the question.
Can I quickly clear something to myself while before you go forward? When
Okay.
we're showing, when we went back to the dividend declared, I thought it was 12,500, but the split, it's not making 12,500 for me.
Okay, let's go back. The calculation.
well,
The one for
I
ordinary
think it's just a
dividends.
typo. Yeah, I think it's just a typo. You put 5,000 there instead of 2,500.
Oh, okay.
Yeah.
So are you clear now?
Yeah.
Okay. So that dividend of 10,000, it need to be subtracted because we got it from the subsidiary. Now we are doing the books as a whole. Is this one, we subtract it. Now I ask, did you see the 10,000 for the interest income? Is where now people got silent. Did you see?
Yes. Yes.
Sorry?
Yes,
So
I can see.
yeah.
now we have to add the interest income of 10,000. Then we add the same one of 6,625 because it's from the subsidiary. Because this interest income means they are coming from the outside parties, like maybe from the bank, the investment that we had at the bank. Those they are not intercompany transaction. That's why now we add them. So we add the 6,625, and then now there was a transaction. You remember the transaction whereby they said the accountant did an error.
Yes.
It was adjustment number
7. No.
8. Adjustment number 8 says on 31 March 2016, there was no area interest on debenture. The accountant of the Khatebe was confused and accounted for the interest on debenture for the current financial year in other expenses. So that interest, it now needs to come back. So it was recorded and also shown on the expenses part. So this one is not a specifically an income. It should go as the part of the finance cost because it's an interest income. But he accounted it as an other income. Do you follow that statement? The accountant of Hadebe was confused and accounted for the interest on debenture on the current financial year in the other expense. So remember, it was an interest income. So it was an income. Instead of recording it in the interest, he recorded on the income for the general expenses. So when he accounted for the expenses, he added that income. Do you follow it? So now we have to subtract it. So when we subtract it, we're going to calculate how much interest do we have on these debentures. The debenture, they say they earn a 12% interest. So, and the debenture, they were for 87,500, but they were only purchased for 43,750. Do you see the amount purchased by SIA? SIA, he only purchased 43,750. He didn't purchase the whole amount which was issued by Hadebe. So we only focus on the one acquired by SIA. So we're going to say 43,750 multiplied by the percentage on the debenture, which is 12%, which will be 5250. So the 5250 must be subtracted here. Okay, I want to check something with Grigori. I mean, Greg.
Yes, Ben.
I know now the class is already ended, but we're still gonna need to proceed with this other income. So I don't know if you're gonna continue with recordings or not. Because I think I will prefer you to continue with the recordings.
Okay, all right.
Okay, we'll notify you when we are done with this income statement, because if I can just show them the income
You want
statement.
this in the recording, isn't it?
Yes.
Okay, so all right.
All right.
Tell me
Okay,
when you're done.
okay, then let's continue. So the interest income now should be recorded. It was supposed to be an income side. I mean, it was supposed to be recorded as a finance income, not as a straight income. So that's why we're subtracting it is 5250. Then we close our bracket, which it will now, the amount will sit on the 17,500. If you say 28 plus minus 10,000 plus 10,000 minus, plus the 625 minus 15,5250, then you should have a figure of the 17,500. Let's just confirm it. 28,125. Okay, there's another figure that I left. There is a figure of the preference shares. Sorry, let's go to the figure of the preference shares. On the preference shares, we receive the preference shares from SIA. From Hadebe. When you go to the analysis of shareholders under the calculation, the preference share capital, you see this. We received it as SIA Limited. We received this amount of 12,000 when he was declaring the dividends. This amount needs to be taken out. Are we happy there?
Yes, Meneer.
Okay, so we have to take, because it was an income to us, but it was an intra-group income. So we have to minus the 12,000, minus the 12,000, the one for intra-group. So we calculate this, then to be the 28,125 minus the 10,000. You add it back. You minus the 6,225. The 6 will be the 6,625. 6,625. And then minus 5,250. minus it's not balancing here. 28,125 minus the 12,000. You minus the 10,000. You add it back, and then the 6625. $28,125. How much do you get on your side?
17,100 rands.
17,100 rand.
Yes. And I did it twice.
Me, I got 17.5. 28,125.
Yes.
You minus 10,000.
Plus 10,000 again. Plus 6,625. Minus 5,250.
You said 6 what?
It's 6,625. And less. It's 6,625 less 5,250. Yeah, it's 500.
Okay.
17,500.
So your other income 17,500. I guess the other one they are following it. Then we go to the expenses. The other expenses. On the other expenses, we're gonna have the one from the pre, which is 191, 250. We added with 52,500, and then there was the thing calculation here on this unrealized profit. This unrealized profit, this one. Because the profit is not yet realized, it needs to be subtracted as an expense. So it follows the admin part. We're gonna less this unrealized profit of 4,000, and then the other portion, which it will be the depreciation charge. This portion also.
Yeah, I'm gonna draw most of the things now. Next week I'll just give in for 1 day. Yeah.
And would you say, please mute if we who's talking, Greg? So we have SPL. We added those two, and then you minus the 4,000 is one for the unrealized profit, which it was a loss. Remember that is a loss, the unrealized loss. We realized we have a loss which is not yet realized. So we have, when you draft the consolidated, you record them straight. But when you draft the statement of an individual, you do the inverses. So please note that. So here it is a loss, it's going to be recorded as a loss of 4,000. And then the 1,600 of the depreciation is this one. It's a depreciation, it's a expense. So we record the minus 1,600 as a depreciation. Minus 1,600. And then again, the same amount, 467. So the 467 you see now it was a minus. You have to add it back. So that's why I say, because now it's a depreciation on the shrink wrap, and the shrink wrap made a what? It made a loss. So the minute it's gonna be realized, it's gonna generate an income on our side. So as soon as we realize this portion of 7 months, we made an income on our side. So the realization is gonna have a positive figure. So we add the 467 this side. And then what else? Then the issue of the debentures. The debentures which they were issued by Khatebe of an amount of 87,500. So that 87,500 need to be multiplied by the 12%, because it will be the expense on the debentures or the finance cost that need to be accounted for, which they will be forming part of the finance income on the other side of the parent. So we minus the, which led me to the calculation aside. The calculation will be like for 87,500, we multiply by 0.12%. So 87,500 multiplied by 12%, which is the 10,500. So we less the 10,500 here. Then we add this figure together. They will give us, let's check, 191, 250 plus 52, 500 minus the 4,000 minus the 1,600 plus 467 minus 10,500. I get the 228,117. I don't know about someone else. Do we get the 228,117?
Yes.
Okay, then we record the 228,117 as an our expense. So these are the expenses. I guess bracket is an income sharp. Then we go to the finance cost. Remember, it must be presented in according to IFRS. So the finance cost, it will be the normal finance cost for both the parties, the 25,000 plus 19,250. So it will be the 25,000 plus 19,250. Then you remember the finance cost, that was the one for the debentures, which was incorrectly recorded. Now you have to add it because now it's forming part of an income. So you have to add it back, which we are adding, which was how much? The amount was 5250. You remember that amount? And when we say 25 plus 19,250 minus plus 15,250, should be minus. I put them wrong signage. Both plus 25,000 plus 19,250, then plus the 5250. We have to get the value here. 25,000 plus 19,250 plus 5250 is 49,500. But this 49,500, remember, is a finance cost. So this one came as an income from the debenture. Finance cost is an expense, as we know. Then we're going to have the profit before tax, which it will be calculated as gross profit was 746. 500, you add 17,500, you less 228,117, you less 49,500. I have a gross profit of 486. Can someone also calculate with me? $746,500 plus 17,500 minus 228,117 minus 49,500. I get 46,8383.
It's correct.
Okay. 486,383. And then we're gonna have income tax. Tax expense. The income tax expense will be sitting on, it will be the addition of both two, the income tax expense for Sia and the one for Khateb. Sia is sitting on 94 plus the one year Khateb is 44,765. And when you add them all together, they give us the value of 139,510, which it will be minus then we have a profit for the year. Then profit for the year calculated as the 486,383 minus 139,510 is 346,873, 346,873. Then we don't have any revaluation surplus made by the parent. OCI will be dash. Other comprehensive income is dash. Okay. So it will be nil 0. Then the total profit, it will still remain at 346,873. Then you apportion according to the minor versus the thing. So the non-controlling interest, you're gonna go to the one of the NCI. You go to your calculation. It will be the one for the current year profit. It will be this one. So you're gonna take the 21,409 thingy, 21,049, then you add it with this one. This one. So you add them all together, they're gonna be the non-controlling interest here. So it will be the non-controlling interest. Non-controlling interest. Which it will be, you add the both 21,049 plus 9. So they will give you the value of 30,049. Then the other remaining balance, it will be the owners of the parent. Of the parent to be 316,824. So when you add these two together, they will give you the 346. Any question up to so far?
With regards to what is revaluation surplus, in what scenario would have? Because I'm looking on this the pre-balance thing. There's a revaluation surplus, but as at 1 April 2015. So what I'm asking is, at what where would we have to put it as other income or
The
other
revaluation,
comprehensive income?
the revaluation, it will only come if, like, as we remember, as they were presenting, they will say we have to have the sins acquisition to the beginning of the current year. So suppose the revaluation was done anywhere in the end of the year, then it's where we're gonna have that value, yeah, the revaluation surplus, your parent. Remember, we're gonna only focus the one for your parent at 25,000. So the 25,000 and the 20,000, they only happened at the beginning of the year. So they are not, it's like the current year will be regarded as the 2 April up to the 2016 end. As remember your analysis, we said we only focus on the sins part. That revaluation at 25,000, it fell under the sins acquisition to the beginning of the current year. It falls under this date. But if it happened anywhere after this date, we're gonna have the OC as 25,000.
Okay, makes sense. Thanks.
Okay, so the what left for you is the SCE, which they asked you to do only the retained earnings and the non-controlling, plus the only non-current asset section of the statement of financial position. So I will request you to finish the remaining part, which it will be the 16 marks plus 16 marks plus 8. That 24 marks, I request you to finish it. And then where you get question, please notify me. I will answer those questions. Are we clear?
Menier,
Mm-hmm.
okay, if I understand, you're asking us to continue with the
Number B and number C.
which is the statement of changes in equity and SFP.
Yes, but remember they only need certain columns. They don't want everything. They want the retained earnings and the non-controlling interest. And then on the SFP, they want only the non-current asset section. They don't even want the current, only the non-current part, the PPE, which will be those shrink wrapper, the ramper, what stapler, and the accumulated depreciation of them.
Oh, okay, noted, Menier. Thank you.
Another one who have question? So you go and complete that part, and then from there, next week it will be that question which I said we're gonna do, which it was question. It was FAC2602. Gregory, you can stop with the recordings. And then the question on